Zoom itself wants to make sure we're aware. That's good. So give folks one more minute. Okay, I vote we get rolling. Welcome, everyone. My name is Matthew Kohler. I'm the president of the Computational Social Science Society of the Americas. It is a great pleasure to welcome everyone here for a special edition of our webinar. This one is in memoriam of Kim Bloomquist, who recently passed away. He was a very important figure in the computational social science community, especially focused on tax compliance behavior. We are joined by Dr. Sascha Hokamp, who will be giving a talk on Kim's work and how it fits into the larger tax compliance research picture. And a couple of announcements before we turn things over to Sascha. First off, the call for papers for our conference in the fall this year in October will be coming out shortly. There will be a special component of it and a request for tax compliance behavioral kinds of models, simulations, and analyses. And there'll be a special best paper award this year for a paper on those topics. And we would like to thank sponsorship from the MITRE Corporation for making that possible. And if anyone is interested in contributing to that best paper award, please let us know. We will post the email address of the board in the chat here, so it's easy to find and contact us if you're interested. As a part of this conference in the fall, it would be great to hear from folks if travel is viable for you. We have not yet made the decision to go in person or not. It would be in Santa Fe, New Mexico at the Drury Hotel, our usual venue. But if travel is not an option for you, please let us know so we can decide how best to serve our community. And with that, I would like to introduce Sascha Hokamp. He has a PhD in public economics and is a big player, shall we say, in the modeling of tax compliance. And in fact, just a couple of years ago, edited this wonderful volume. If you don't have it, I suggest you pick one up, on the agent-based modeling of tax compliance and tax evasion. Quite a lot of information in it. It's a quick read, compelling. The protagonist is wonderfully written. He has spent quite a bit of his career modeling tax evasion and tax compliance, but more recently he started putting his hand in the fisheries arena, which I think is fascinating, as well as climate change, and that is taken off, shall we say. Perhaps even someone that folks are familiar with, one Stiglitz has even cited Sascha's work, which is very exciting, at least I think. And so with that, I will turn things over to Sascha and ask that folks keep themselves on mute during the talk. Please put questions in the chat. I will be monitoring the chat. And then at the end, we will open things up for a Q&A with Dr. Hokamp. So please take it away, Sascha.
So thank you very much, Matt, for these nice and introducing words. So I hope you can understand me well. Does it work?
Yep, you sound great.
So, okay, so this is a talk about Kim Michael Bloomquist. And so he has done an economic career or a scientific career in economics. He has a bachelor and a master in economics, and also master in urban planning. And then he started the endeavor to do a PhD in computational social science and was successful in 2012. And he served with different employees, for instance, the Peace Corps and the Army Corps of Engineers, and he served for 23 years for the Internal Revenue Service. And I met Kim personally the first time in 2009 at the Shadow Conferences in Münster. And Kim was the discussant of my first scientific talk that was done at this conference. So before this talk, we discussed a lot about my model, and he gave me some feedback on that. And he made a very, very good discussion, and we had a very lively discussions afterwards. And I really loved to discuss with Kim and get his feedback. So, and it's a little bit a pity that I cannot give an overview of all these works that Kim have done in the last years of his, or in all the years of his career. So I will focus on these papers. So I will start with his very first agent-based simulation, which is dating back to 2004. Then I will briefly give an overview of his review article. Then he published another agent-based model, and also he wrote his PhD on agent-based simulation of tax reporting compliance. And in this PhD, he already included some insights from experiments that have been published later on. So I will also give you a brief sketch of these experiments. So what will be the agenda for today? So I will motivate a little bit why tax evasion, why numerical simulations, then the famous Allingham-Sandmo approach will be introduced, and then I will focus on the work what I have described before from Kim. So, so why tax evasion? So tax evasion is a very important topic. So in the US budget year 2001, the income tax evasion was about 345 billion US dollars. In 2006, it amounts to approximately 450 billion, whereas the net tax gap was 385 billion. So in his PhD, and also Black et al. Have described three different kinds of gaps that were considered with respect to tax evasion. So you have the underpayment gap, that is the proportion of the total true tax liability that taxpayers report on their timely filed tax returns, but is not paid on time. So then the non-filing gap, that would be the amount of true tax liability that is not timely paid by taxpayers who do not timely file a required tax return. And then you have the underreporting gap, that is the amount of true tax liability not voluntarily reported by taxpayers who file timely tax returns. So you have the filing issue and the reporting issue. I will come back to this later on. And obviously, with respect to if you have tax evasion, the government can spend less money, and therefore tax evasion also causes misallocation of public goods and so on. So a little bit deeper in this tax issue. So the gross tax gap I already announced was in 2006 was 450 billion US dollars. And then you see here the amount of non-filing, underreporting, and underpayment, where underreporting is the biggest issue with $376 billion. And here, the most important part is the individual income tax, with estimated to be a gap of approximately 235 billion US dollars. So, yeah, that's the numbers. And now, why numerical simulations? So why agent-based simulations? So agent-based simulations are appropriate according to Rand and Rust if you have medium numbers, local complex interactions, and heterogeneity. So the agents have different properties, a different income, different age, whatever. You have rich environments and temporal aspects. So for instance, you need to declare every tax year, you need a tax declaration and have to file a return. And you have adaptive agents, so that agents, if they are faced with the same environment, they may have learned, and then in the next time they face the same situation, they may decide in another way. So, and here agent-based modeling can serve if you have a very complex model. So agent-based modeling can deal with the complexity of the model. If you have a model that can be generalized, then analytical modeling would be a better approach. So agent-based models can bridge the gap between microeconomic theory and macroeconomic effects. But keep in mind, all models are wrong, but some are useful. So it depends on the purpose that you have. So that is because all models are necessarily only a picture of the reality and not the reality. So here I would like to briefly introduce you to the Allingham-Sandmo approach to tax evasion. So usually you have an expected utility maximization. So the left part, that would be P is a probability. So you have a utility of the true income minus the tax you would pay. That would be the tax rate times the amount of taxes, the amount that you have declared. And on the right hand, so that would be the part that you would expect if you would be not audited. And here on the right hand side, or on the right, you have the amount that you would expect if you would be audited. So you would have to pay a fine on the amount that you have not declared. And obviously you have to pay the tax on the amount you have already declared. So then you can try to solve this. So if you assume a utility function, then you can try to solve this analytically and calculate how much taxes you have to declare. And with respect to the boundary conditions, so obviously the first derivative must be positive if you declare nothing, and it must be negative if you declare everything. So you need to have a sign change so that that you have a solution in the middle, and so you get an interior solution if the this inequality that you see here is fulfilled. So with respect to what kind of utility functions have been used here, so I have a paper out there that was presented last year in at the Shadow Conference that was organized by Brunel University in London. And so here I overviewed these kind of functions that would be possible. And Kim has contributed one of the first papers that use implicitly a linear function. And here the linear function leads to a 0-1 decision, so that you only have fully evasion or fully compliance. So therefore it does not fulfill all requirements, but partly you can work with that. So in the later models, Kim then used Markov decision processes and did not use these kind of utility functions anymore. So this was one of his first works, and he then presented or provided the very first review of agent-based tax evasion and compliance models that was dating back to 2006. So there were 3 papers out there at the moment. That was Mitona and Patelli, Davis et al., and the work by Kim Blomquist. And there are some similarities. So there's agent interaction in there. So the agents can interact with their environment. You have audits. Most likely you have random audits. And then you have a time interval. So each year is one tax year. And the model size was, from the perspective now, a little bit low because you have only 1,000 agents at max in these models. And then there were some differences. So with respect to the invention that Kim gave was that he implemented an overweighting of audit probabilities, for instance, and he introduced so the agent complexity was different between these models. And with respect to the implementation, Kim implemented his first models in NetLogo, and afterwards the 2011 model was also implemented in Repast. So then this overview paper also discusses the performance of models, of the different 3 models, and then it concluded that the opportunity to evade is one important point, and also the enforcement. So the enforcement parameters that are the audit probability, the tax rate, and the fine rate. And then that was also something that Kim was very much concerned with, was the validation and calibration of these models. So I will come back on this topic later on. So then there were done some other reviews, and I have also, together with Matt and together with Sanit, I have also seen that he's also today here, and together with Laszlo Bullius, we have written or edited a book on agent-based modeling of tax evasion. And here we have an overview, or given an overview in the introducing chapter. And here I would like to focus now on the papers by Kim Blomquist. So first, dating back to 2004, he published a tax compliance simulator where he introduced lifespan of the agents. So they have only a certain limited time span there where they can pay taxes. And he also included social networks there. And with respect to his 2011 model, that was a small business tax compliance simulator. So he started with individual tax reporting, and then he moved to small business tax reporting, and here he introduced that these businesses can go also bankrupt, and he calibrated. That was one of the first papers where he calibrated his model with experiments and with data from the Internal Revenue Service. And later on, he developed the individual reporting compliance model. That was also the main part of his PhD thesis. And this model was programmed in Repast. And the 2 models previously were a little bit like toy models with low number of agents. So it's at max 10,000 agents. And here he now started to go further, to have more agents. So he built an artificial county in this model with 85,000 agents, and he calibrated this with respect to data from the Internal Revenue Service. And he also included, that was an invention here, he included third-party reporting so that you have different levels of sources of incomes that can be taxed, so that some part you are, if you cannot evade because you have third-party reporting to the IRS, so that the IRS already knows what you will earn. So you can only evade some part that is not reported by third parties to the IRS. So this is also described in the chapter 7 in this book. And Matt has also written a nice publication there together with Kim that was published in a Journal of Artificial Societies and Social Simulation. So Kim has also a very huge impact on the agent-based tax evasion modeling community. And that can be seen that these three models have been used frequently to as a docking study or as a replication study or as a starting point for other works. So for instance, these two papers or author groups have used works by Kim. So there was the Turkish group by Arsian and Iken, I hope I pronounced that in the right way, that used the Bloomquist model and calibrated this model with Turkish revenue administration data. And there was also a very famous paper by Klein et al. And also described in the chapter 8 of this book, where this model by Bloomquist was extended to a massive scale. So here we have 12 million agents here. That would be approximately the number of taxpayers in whole California. So, this was not the only paper that used works of Kim as a starting point. I will come back later to that. So, and the overview in the book that I have edited is a little bit more than these papers. So here we have also other papers. So for instance, there was a Spanish group that also calibrated their model to Spanish empirical data, and there was a Portuguese group that used survey data, and so there was also a paper out from Nordbrun and Samak that was concerned with data from the Swedish tax agency, and there was also an econophysics paper that used experiments to calibrate the agent-based model. Here I was also involved in this author group. So the calibration was starting with Kim, and then it was done frequently. And after this book was out and as published, so that was the review I reported was Hokamp et al. 2018. There was also, Kim has provided the first, and in between there was also a review paper by Bazar et al. That was most likely concerned with econophysics. Here I'm also a co-author, and I announced that Kim has had a very huge impact on the agent-based tax evasion community. So here are two other papers that have also used works by Kim to investigate different kinds of topics. So, for instance, the paper by, I hope I pronounce it in the right way, Suburai and Rao, they investigate high tax rates and the effects on the labor market. So, on high tax rates, you would have less activity on the labor market. And there was also a paper by, I also hope that I pronounce it in the right way, Iohannou and Tikuat. And they have, because in most papers you have random audits, because that's the simplest way to include audits in these kind of models. And here they have improved the audit mechanism, so they have some kind of learning tax auditors here. And and then there were also many other papers, and I guess that there will be also other papers published on these topics on agent-based modeling of tax evasion. So I already said that Kim calibrated and he also validated his agent-based models of tax evasion and compliance with tax experiments in the laboratory and with insights from the IRS. And so his PhD gives an impression of such an approach. So his individual reporting compliance model uses a data set that consists of artificially generated taxpayers, and that was created by matching records from the statistics of income public use file to tax return data to each of the community's taxpayers. So he, because he has knowledge of the data of the IRS, but he was not able to use this or to publish this data because it's confidential, and therefore he created an artificial data set that was matching to the IRS data and used this data for his models. And so I will now focus on tax experiments, and tax experiments have been used to investigate external validity. For instance, do subjects behave in the laboratory similar to reality? And is there a difference in the behavioral response of students and non-students? That was a paper where, so I'm at al 2015, where Kim was also a co-author. So so the IRS sponsored laboratory research on taxpayer behavior frequently. And for instance, also this paper from 2015. And later on, I will also talk about a paper that was published in 2017, where also Kim was a co-author. And both of these papers have been sponsored. And in this paper by 2015, they discuss the promise and the pitfalls of laboratory experiments. And it's almost impossible to ensure the independence required to conduct econometric research using field data. It is difficult to measure, and to measure accurately something that is very nature people want to compile. So because it's in the shadow, it's different or it's difficult to get it in the light what is in the shadow. So then there's a frequent claim that undergraduate volunteers differ from taxpayer behavior because they don't have any experience with respect to tax paying, and there are many other issues. So we will focus now on the leading question of this 2015 paper: do participants in laboratory experiments behave differently than individuals in a similar but naturally occurring setting? So on the left-hand side, you see the reporting compliance rates for the taxpayer sample. So you see here that on the left side, that there's a part of the community that is reporting nothing, and on the right side you see there's a part who is reporting everything. So you have a 0-1 decision nearly, and on the right hand side on figure 2 you see the experimental sample that was done with different kinds of audit probabilities. And so please, can you turn off your mic? That would be nice. Then with respect to this different audit probabilities, you can see that there's a shift from people who are fully evading to people that are fully compliant. And if you look on the lower right-hand side, you have a high audit probability of 30%. And here you have even more compliance than non-compliance. So that is the deterrent effect of audit probabilities. So then another question was, do students in tax compliance, laboratory experiments behave differently than non-student subjects in identical laboratory experiments. So here in the paper by Elm et al. 2015, they did a model, and they have a regression, and they have two different parts. So they have one model with information services and one model with positive inducements. So with respect to information, there was information about the tax liability uncertainty and the tax agency information. And with respect to positive inducements, there was a positive inducements by tax credit and by an unemployment benefit. And with respect to the different models, they have investigated 4 models. They started with a pooled sample so that you have students and staff, and then they introduced a dummy variable for a student. And in model 3, they introduced an interaction of a student dummy with policy treatment. And in model 4, they introduced an interaction of a student dummy with the audit probability. So with respect to the results, I would like to focus here on the main finding, that is that student is in model 2. If you introduce a dummy variable for student, you see that this is not significant. So therefore, you can use the data from experiments for the whole society. So with respect to other parts, for instance, the tax liability uncertainty, that would be significant. And in model 3, so you see that this doesn't matter. So, but overall, you can use experimental data that was developed by with students. You can use this for agent-based models, for instance. What Kim has done is in his PhD. So then the other paper with respect to Allen et al. 2017, they provided 3 hypotheses. So is there an increase in the audit rate for does then increases the amount of reported income? And then hypothesis 2, an increase in the costs of filing decreases the likelihood of filing a tax return. And the hypothesis 3, an increase in the psychic costs has an ambiguous effect on the likelihood of an individual filing a tax return. So, however, an increase in the psychic costs increases the amount of an individual who files a return. So I will come back to these 3 hypotheses later on. And first of all, I would like to show a little bit of the results of this experiment. Again, there are different treatments. So there are 4 treatments. And these treatments are different with respect to the filing and information, and with respect to the audit information. So you see this indicated by the 0 and the 1. So with respect to 0, there was no information, and with respect to 1, the information was given. And therefore, in treatment 1 and 3, you have no information about filing, what the others have done. And with respect to treatment 2 and 4, there was an information given that the neighbors have filed a tax return, and it was also given an information how much % of the neighbors have given have filed a tax return. With respect to the audit information, that's similar. So in treatment 3 and 4, the participants have been given information about the audits, and also with respect to the results of the audits. And with respect to the filing, we see the a well-known behavior. So in experiments that first you have a higher compliance, and after several rounds, the compliance will be lower. So you see that here that you have in the starting round, you have nearly 70%, and in the last round, you have below 60% of filing rate. Then with respect to the results, I would like to talk about now of this experiment. First of all, I would like to talk about the audit probability. So you see that there's no significant effect with respect to filing, but there is an effect with a significant effect with respect to reporting. So if the audit probability is rising, then the reporting will be higher. With respect to the dummy variable leg unaudited, so if you have been audited, there's no significant effect with respect to the filing, but there is a significant effect with respect to reporting. So if you have been audited, then the tax declaration in the next period will be higher. With respect to the costs of forms, so if you have costs to file a tax return, to get the form to file a tax return, this is significant, and so the higher the costs, the lower the filing rate. And here now I've written these results down. So what I talked previously about. So if the audit probability for filers will be higher, then this will have a positive and significant effect on reporting, but it has no significant effect on filing behavior. And so non-filers are not motivated by the desire to avoid an audit process. And with respect to previous audits, the individual will be more likely to report more taxes, and filing is negatively correlated with the cost of obtaining the tax forms. And then the next result I would like to talk about is the neighbor filing information dummy. So that is also a negative effect. So if you get an information, then you would be less likely to file. And you have also a positive effect with respect to the lagged neighbor filing percentage information. So if you get an information how much percent in your neighborhood have filed a tax return, then the filing rate will be higher. With respect to these results, for the filing rate decision, the coefficient on lagged neighbor filing percentage information is positive and significant, and indicating that an individual is more likely to file a return when the proportion of neighbors filing is greater. However, the treatment dummy variable, neighbor filing information dummy, has a negative and significant coefficient for the filing rate, indicating that simply having this information decreases the filing. I will now come to an end and come to my conclusions. So after controlling for the dynamic effects of neighbor behavior, the behavior of one's neighbors has a statistically significant and economically large impact on filing and reporting behavior. That was shown by Kim and his co-authors in 2017. And participants in laboratory experiments behave similar than individuals in a similar but naturally occurring setting. That was the figure I have shown with the bimodal behavior. And then student subjects in tax compliance laboratory experiments do not behave differently than non-student subjects in identical laboratory experiments. So that was shown by Kim and his colleagues in 2015. And then with respect to agent-based modeling, I would like to give you here the main points of Kim's PhD thesis that has been to show that building tax compliance agent-based models is both possible and desirable in order to research the answers to questions that cannot be adequately addressed using existing analytical tools. And his key contributions were that he has developed a community-based approach to modeling tax compliance that allows network relationships to be modeled explicitly. So that was his first model with social networks. And and then a methodology to impute misreporting income and offsets using data from taxpayer random audits, thus enabling micro-level analysis of taxpayer reporting behavior. He has used random audits frequently in his model, but he also has used some kind of informed audits, so that in his individual reporting compliance model, he has used also some kind of that the taxpayers have divided into classes, and then with respect to these properties, then this will be used to select some of these taxpayers for an audit. So he also improved with respect to random audits to more sophisticated audits. Then finally, he has created a data set of artificial taxpayers that can be used for by independent reviewers for verification and validation testing. So, and he frequently, and he used this for his individual reporting compliance model. And the calibrated model is able to closely reproduce the aggregate income tax and tax reporting characteristics for a community of nearly 85,000 taxpayers. And so here I would like to thank for your attention, and I would like to end with a story also about Kim, because I met him frequently in several conferences, and there was one conference where we together sit in a session, and there was a talk given from another guy on agent-based modeling and tax evasion, and during the discussion, it was unclear if from whom something was, and there was a discussion if it comes from Kim, and then Kim says no, that he thinks that Sascha was the one who has invented this, because I think it was something about back auditing or something like that. So and I was honored about that, and so now I have given here a talk about Kim's work, and he is not here, so I will try to answer the questions you might have, but I cannot promise that I can answer it, but I will try. So thanks for your attention.